I get this all the time, and I'm not here to judge. Well, maybe a little. But after I do a jointly filed tax return, people ask me of the results, tax due or a refund, how much of that is allocated toward me versus my spouse. We're not asking legal questions here. We're asking practical questions. I made income. I paid taxes. So did my spouse. Based on that, how much of that results, the tax due or the refund, should go to me versus my spouse? Well, I got a spreadsheet that I created based on this exact scenario to answer this question. So here's what we're going to do. I'm going to let you know the documents you need, my method behind the madness, and then I'll show you a real live example with this spreadsheet and documents on how to calculate of your tax results how much should be allocated towards you versus your spouse. Let's do it. All right, so you're going to need 3 things in order to get this done. Number 1 is a copy of your tax return. Now, if you filed your return through TurboTax and you don't know how to get this, you can use this video up here on how to get that from TurboTax. Number 2 is you're going to need all W-2s you used to prepare this return. That includes yours and your spouse's. Number 3 is my lovely spreadsheet that I created. There is a link in the description, so be sure to click that to be able to get that spreadsheet. All right, so the method behind the madness here. How did I get the calculation to be able to allocate the tax results between you and your spouse? So what I did here is I got the effective tax rate, which is the whole tax liability on the tax return, and then I just divide that simply by all of the income. And then I find out how much income you and your spouse made and how much tax you and your spouse paid. What's the difference between that and what the actual effective rate is? And that would be your share of the results. That confuse you? Great. Well, here comes some more confusing stuff. My spreadsheet. I promise I'll do my best to make you understand this, though. All right, so we got the spreadsheet up over here. I got the tax return and the W-2s up over here. So I'm going to tell you exactly kind of how I filled the spreadsheet out. So we would start with the tax return. In this case, they have a little bit of investment income, interest, dividends, capital gains. I would look at the tax return here, right, to get that information. I got interest, dividends, 87 plus the 236. That gives me this number up here, right, the $300. Then they had some capital gain right here, 17K, of which none did pay any tax, which is a totally normal thing here. Now, if we do have some other income, right, something, IRAs, pensions, Social Security, if there's anything on Schedule 1, i.e. like business income, you could just kind of change, your information here, something like that, and enter that amount there, okay? Now, if you don't have any of that, vice versa, you could just put zeros in there, okay? But there you go. Most common, though, we have some jobs, right? W-2s. So let's take a look at the W-2s. We got Sally here, made some money, pretty good money, actually. Box 1 is what I'm putting in right there. Box 2 is that number there, right? The $49,000 federal income tax withheld. And then we're looking down here, box 17. In this case, this is California income taxes withheld right there. We're going to do the same with John. Right, box 1, there it is, matches. Box 2 doesn't match quite. Why? Because there's something I'll explain in a bit, but I added that $400 there. You'll see that $30,000 comes straight from this W-2 though. And then we have the $12K from the state income taxes paid. Now, the way that we can verify this was done properly, this first step, because you will want to do that, is these totals, right? The total here, and I've kind of included a little note that says, hey, let's see here, edit note. There we go. 1040 line 9. So if we look at the 1040 line 9, there it is. It matches right there, okay? And we're going to do that with these here too, right? Federal income tax held, the $30,000. I put the note there that it is actually these two lines would be combined. Estimated taxes. So if we had self-employment income over here, we would put like our estimated taxes right there. So then, we can again allocate these correctly. So those two together, that would be this number here, right? Line 25 plus 26, those two together. But you'll see that does add up. California, same thing we're going to do, right? We have to double check here, but you'll see I do have like a little note there. It should pop up there. 540 line 78. So if we go to the 540 line 78, there it is. Wham. They match. The next thing you're going to want to do is get the effective tax rate, right? There are marginal tax rate and effective tax rate. Effective tax rate makes a lot more sense to essentially everybody, I would say. But nonetheless, effective rate is the total liability divided by the total income. So that's essentially what we're going to do. I have the instructions here in red on essentially how to do that, but we're going to look at the 1040 line 24. That is the total liability, total tax, right? That's what I got here, right? The 80,000 divided by the total income, which is this line 9 here, the 400,000. Man, making good money with this number right here. Okay, that's how we're getting that almost 19% effective rate with the feds. Now, if we look at the state, we're kind of doing the same thing. Again, we're looking line 64. Where is line 64? There it is. Voila, right? The 29,000, almost 30,000, divided by your total income, the 32,882. And that's how we're getting that 7% effective rate. And now in these two sections here, right, this green and this blue section, one's with the feds, the other's with the state, we're now taking, hey, we paid some tax on our income. What is this rate? And that's what we're going to put here, right? That's the rate that we paid. We're going to take the difference between the rate that we paid and what I would say, should have paid, the effective rate. And then we're going to multiply that difference by the income to see kind of where would that end you up at. Would it be a refund or a tax due? Now you'll see these negative numbers. I kind of put a little note down here. Negative numbers equals a refund, i.e. you paid too much. And positive numbers means you didn't pay enough. Obviously, these two securities here or the investment income, they didn't pay anything, right? They paid nothing here. So you're going to multiply these numbers by the effective rate, right, that 18%, and that's how we're going to get these, I would say, under withheld or a tax due scenario on these amounts. You'll see here, though, right, Sally, she paid more than enough. She paid almost 20%. That's what that, you'll see the formula there, the 50,000 almost divided by the 247. That's what gives us that 20%. That's more than the effective rate, right? There's that formula you'll see. And now we multiply that 1% by her income to get her, I would say, quote, refund in this scenario. Now you're going to see here on the tax return, net all these numbers here together, right, is a 192. They actually owe on the tax return. We'll see that on the return right here, right? They owe $192. And with the state, they're actually getting a refund, right? $3,900. So that's with all of these combined. Now, we're going to, again, we do this with all of the income, right? John is going to get the same, right? He owes a little bit here based on that. Now, what do we do with this investment income? In this scenario, I essentially just split it 50-50. Couples, do what you please with the information. That's generally what I tell clients too. But in this scenario, I did split this 50-50. But again, so same thing happened with California here. Essentially, once we enter these numbers here and this number here, all of this should automatically calculate for you. You will want to double check that these numbers do match your tax return, right? Like that $3,967, was there a refund on the tax return here? Yes, there was. Okay, so I got that. And now how do I allocate this amount due and this refund to what they made and what they paid? This is what I did down here. Okay, and now you'll see, right, Sally, she paid more than enough here, more than enough there, right? She should be getting a $7,000 refund is based on that, but not quite. Why? Because of this investment income. So that's what I did. I split this investment income 50-50, and that's why that went down to $5,000 refund, and John essentially has to pay that difference. So, you know, what would I say, generally speaking, Generally, I would say, no, this is all 50-50. But in this case, practically speaking, I would say, right, Sally should get this whole refund here, and then John should pay that amount due. And then maybe, if they work it out between themselves, maybe John pays him a little bit extra because, that's kind of not fair because she should have got a $5,000 refund. He should have paid $13.64 here. Okay? Man, I hope the video was helpful for you. If it was, smash the buttons for me. Help me out as well.